Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Tuesday, the 19th of April. Starting off with Arrow Exploration, which has looked basically good from the turn of the year. Good support for the shares, totally above the 50-day moving average since the early part of January, which is normally a plus. Unfilled gap to the upside there at the end of the month, and another fresh gap to the upside through resistance, which is even more positive happening today. View at this stage as it was before the gap higher, basically above the 50-day line around 12.5 pence. We're looking for a top of broadening triangle target as high as 24 pence, perhaps as soon as the middle of June. So maybe over the next 1 to 2 months, something like that. And we just had a bounce off the uptrend line in the RSI window as well. Third bounce, normally a decent one as well. Moving along to a stock which is perhaps rather more obscure, Alkemy in capital investments. Here we've had a gap to the upside. We already had the golden cross and a gap higher at the end of last month, so another gap here suggests that things could still move on quite high. At least a retest of last month's resistance, £2.15. If you're a fan of the shares and looking for greater achievements by the stock, then you could argue that the stock is in a rising trend channel in the way that I'm drawing at the moment, which, if I can draw it successfully, would mean that we were in a rising trend channel whose resistance line is heading towards as high as the £3, well, almost up to £3.50 area, actually. That line there from back in February up to that sort of zone, and maybe we see that over the next couple of months. So looking good there, especially while we hold above the last swing low there at £1.55. So above 155 as high as 350 for Alkemy Capital. Stock which is also on the move in a decent way is Argos Resources. The reason for inclusion today, apart from the way that we bounced off the 50-day moving average for the second time in a month, it's also the way that an end-of-day close above the top of the gap down at 2.35 would be a recovery signal or ongoing buy signal, and could lead us up to 5.5 pence by the end of next month, which is the top of a November rising trend channel. Upside certainly valid while we're above 1.9 pence, which is basically just below recent support for the shares. Onto a stock which has taken a bit longer than we might have hoped for to rally. It should have gone straight up, I think, probably in February, really, and hit the top of that broadening triangle at 6.5 pence. Last month, but we've had a bit of consolidation along the 200-day moving average and the 50-day moving averages as well. Top of the channel, 6.5 pence. Looking for that by the end of next month now, and especially while we hold above the 50-day line at 3 3/4. New face at Chill Brands, which will hopefully sort things out and make the bears look at this company in more positive way. Here we've got potential, and it's only the potential for a move to the top of that rising January trend channel at 12 pence, and that's valid while we hold above the recent support area at 4 pence. The other point to note here is the RSI window, where we've had what I call a slingshot rebound, so a falling support line, and then that final low there pushing the shares for a turnaround. Should help the shares at least get up towards the top of that gap there, which is around 7 3/4 pence. I would think that would be the minimum now after the extended base for the shares, and 12 pence the best case scenario on a couple of months time frame. If you are cautious on the stock, maybe you wait for an end of day close above the 50-day moving average, but obviously that would give away some of the upside. A stock which has been threatening to push higher for quite some time now is Empyrean. Still needs to break out of that bull flag that we've been in since the second half of last month. So 12 pence plus on an end of day close basis or a weekly close basis could then open up the shares to a move towards 18 pence, which is the 1-year resistance line projection. Upside value certainly while we're above the 10 pence zone. Stock which is relatively obscure is GYG, but the reason for the inclusion today is a very strong chart pattern. We had a gap down and then a gap down last month and then a gap higher. and sort of take off from that bear trap gap reversal. Initial target here, obviously 40p at the top of the gap, but an end of day close above that, and we could be heading for February resistance at 55 pence. But it'll be interesting to see how that unfilled gap to the upside and the overall bear trap gap will pan out. Looks as though it could be quite decent. One of the stocks of the year on many fronts has been i3 Energy, and basically up almost from the get-go in January. The current situation is we've just come very close to hitting that line at that top of that broadening triangle, a bit like the one we saw at Arrow Exploration. That was around 32 pence, so very close to that. Would expect the shares to at least get up to 35 pence at the one-year resistance line, top of that price channel, and hopefully by as soon as the middle part of next month, and maybe even if we're lucky by the end of this month. But above 28, looking for 35 as an initial target, as part of the ongoing rally that we've seen. Another stock of the year, and obviously a beneficiary of the post-COVID period that we've got now, is Live Company. Here we've got this V-shaped bull flag, which looks like a mid-move consolidation. That would suggest that we could head up towards 13 or even 14 pence, depending on how straight I can draw that upper parallel there. But let's call it 14 pence while we're above 8 pence for Live Company, and maybe that could be hit as soon as the end of next month. We've had that very strong uptrend line in the RSI window, a bullish divergence line after that bear trap in January. So it looks as though there's everything to play for there, especially when we get a fresh high for April above 10 pence on an end-of-day close basis. Mirriad Advertising is the next contender, and here we've got this decent pattern with the narrow bear trap that we had middle of last month, then shot through the 50-day moving average, rising 50-day moving average as well for the last couple of weeks, and then the pièce de la résistance is the unfilled gap to the upside from last week through 20 pence. Very, very impressive, that formation, and you can see how the shares are really powering ahead now. We're sort of gaining momentum. The view now is that above 20 pence, we're looking for at least 40 pence, which is the top of the broadening triangle from September. So probably as keen about this as I could be about any stock, even though it's purely on the basis of the technicals rather than the fundamentals, and bullish divergence line there as well, just to cap it all. So I mean, that chart probably has everything that you want to see in a potential recovery, bullish recovery situation. Another stock which has really come up with the goods this year is Southern Energy, and the reason I like this is that we also had an island reversal, so we had a gap down, then a gap higher, which remains unfilled, another gap higher back in March, and another one today. So that is, again, about as good as it gets. Top of the channel, fresh channel that I've drawn here, now up to 65 pence, and that could be seen as soon as the end of next month, so plenty to shoot for there if you are a bull of the stock. Finishing off with Simec, which has managed to, if I can get the right code in, has managed to also recover quite nicely. Here the secret, I suppose, was the extended bear trap below October support, so below the 1.25 pence area. We had that for several weeks during February and early March. Then the break of the neckline resistance at 1.39, but really the fun has actually started this month with the unfilled gap to the upside after a bear trap through the 1.8 pence area, and currently we're looking for the top of that broadening triangle from October as high as 3.85 pence, while we hold above the basically the 2.1 pence area, which is the latest support. Uptrend line in the RSI window as well, so a very healthy looking situation, and 4 pence by the end of next month seems to be reasonable. So pretty good, almost all the stocks today, reasonable quality, let's say. Not mentioning the ones which maybe not quite as high quality, but pretty good selection today. That's it from me today. More updates tomorrow.